Hi, my name is Gervais, Chief Economist at Farm Credit Canada, with a brief commentary on the decision of the Bank of Canada to cut its policy rate today by 25 basis points. So this decision, I would say, was largely expected, although there were a few doubts coming in over the last couple of weeks. For example, the September jobs report was largely positive, but the underlying trend when it comes to the labor market is still, of a labor market that's weak. Unemployment rate is 7.1% and has been trending up over the course of the last 12 months. The other data point that came in was inflation. Inflation was a little bit of a surprise in September, 2.4%. But the bank believes that inflation expectations are somewhat well anchored. If you look at their business outlook survey, for example, that basically says that businesses have well anchored inflation expectations. And so all in all, given the prospects of growth, given the trade disruptions that we're facing, the bank believed that the economy could actually live with a lower interest rate and that it was not going to fuel inflation in the Canadian economy. Now, going forward, the interesting question is whether or not the bank will actually cut interest rate once again. I think it's to be determined whether or not we'll see another rate cut before the end of 2025, although I do expect that there will be another one, because at 2.25%, which is the current rate of the policy rate of the Bank of Canada, that's at the lower end of the range of what the bank would consider the neutral rate. And so to bring the policy rate a little bit under this would actually support the Canadian economy a little bit more. I do think that this is what we're going to see in the next couple of months. Now, pay attention as well to what's going on in the United States. As we're recording this, we don't have the official decision of the Federal Reserve, but we do expect the Federal Reserve to cut the policy rate by 25 basis points. And there are more cuts as well that are expected before the end of the year and then into 2026. The bottom line is that long-term rates in the United States are not expected to come down significantly. And these long-term rates, the bond markets in the US, has an influence on the bond market in Canada and long-term interest rates in Canada. So yes, we expect short-term interest rates to come down a little bit more. But when it comes to long-term interest rates, we expect a little bit of stability when it comes to long-term interest rates in Canada. So for more information, I encourage you to go to our website at fcc.ca/economics.